Good evening, morning, uh, my fellow mates, fellow traders. So, this is the third episode of 2025 mentorship that I'm starting, and I want us to reflect on the price action and what actually happened last week, which was the week that ended on 17th, and 5 days prior was, I think, on 12th. So 12th to 17th week of January 2025. Try to learn and try to see how price are delivered. So this is the weekly time frame, and if you are not in my Telegram channel, I recommend that you go and try see that I had given what I was expecting for this week. Wanted to see price pushing to these previous month's high, but you can see we came into close proximity, didn't tap to that level, but we did react off the specific level that I wanted to see a reaction off of. So currently, what we can see is that we tapped into the weekly immediate rebalance, as you can see over here, the WIR, then we reversed going higher. Now, we have been bullish for gold, so my direction was I wanted to see higher prices. And first of all, what we as traders actually need is actually two things. We need to identify the direction and also try to identify the narrative, which is the area of which we are expecting something, maybe if you are bullish. So which level am I expecting the market to be bullish from? That's the narrative, and we're going to talk about the context. To me and the narrative are kind of the same. Then after you have identified the two, maybe the direction and the context, then execution comes in, then risk management comes in, and then that is all that we as traders need. So without anything, and I will do a video what I'm expecting this other week. So be tuned. Join my Telegram channel at ranks mmexam, and off there we can learn more. So I had my context, I had my direction, which was bullish. Want to see price deliver to these highs because we had formed bullish engulfing candles. We had this nice displacement candle, and now I was also expecting the next displacement candle to these levels. And what was my context area? An area of which I want to see higher prices. I had identified that weekly IR from the weekly time frame, and after identifying that, sorry sorry for that, after identifying that, I needed to drop onto the lower time frame and do some refinement. So my first target for that period was the previous week's high. That's what you can see. This was the Friday's high, and after dropping to the daily time frame, I had these. If you can back to the screenshot that I sent you guys, I had this specific level, which was my daily immediate rebalance also, which was my first scenario, of which I wanted maybe to see a sting into it, then a push going higher. But what happened? The market dropped into my scenario 2. That's why you can see my scenario 2, of which I wanted to see a drop into this level, then a push onto the previous week's high, and later on onto that monthly high. And you can see we delivered nicely, dropped on Monday, which provided the lower week. So if we go back to the weekly time frame, you'll identify we have this long wick, or the tail of that candle is kind of long, which was the manipulation phase of that candlestick. So after forming that manipulation phase, then we did reverse higher as of Tuesday, Wednesday, Thursday, and then on Friday we kind of dropped, which I'm gonna do another video concerning that. So after identifying that and knowing my context area, how can I align? How did I read price, and that's where now I take you straight to the 1 hour time frame and see what a price did, and try to uh, see what we did kind of better, and how can we do maybe something next month better, and read price action better. So this is the 1 hour time frame of last week, and we can see the weekly profile printing itself actually clearly, where we have price creating the low of the week, price then pushing higher to create the high of the week. So what happened? This was Friday, where we had NFP, and NFP pushed our prices higher, and we created the high of that previous week before this week. Okay, so we created the high over the previous week on Friday, as you can see above this level. So this is where we have the PWH, which refers to the previous week's high. Then as of Monday, to me, I wanted to see what will how price would react to my context areas. And now let me take back the first context area that I had labeled up, which was this daily immediate rebalance, you can say over there. So that was my first context area that I was watching to see how price reacts to that level. And what can we see? Price dropped. This was on Monday. Price dropped, and at this level we didn't actually show any sign of price pushing higher. So after identifying that there is no any signal that price will be pushing higher, so I deleted this so that we make or I make my charts clean to observe. Then I waited for to watch what price will actually do during uh, or when it reaches the second context area, which was these weekly immediate rebalance, as you can see. So price dropped. We kind of rejected around this period of time. We kind of dropped and pushed higher, and consolidated a little bit around this area. Then price pushed lower. We didn't really have anything for Monday. I don't think whether I took any trade position on Monday. Then a price consolidated off, then started pushing higher, forming bullish fair value gaps, but they were not traded into. So around this area I wanted to see a market sting into it, then continue higher, but we didn't. Price pushed, we consolidated a little bit, then came on Tuesday when price dropped lower into the OTE of this price leg. And this was now the time I was watching what could the price actually do. Can we have that reversal going higher, or will the price actually continue dropping? So I was keen what price will do around the OTE of this price leg from the low to the high. I wanted to see price drop to the discount area and see what will do. So price dropped during the London session. As you can see, Asia kind of consolidated, London dropped lower. Then during the New York session, what we see around the 8 a.m. candle, we had a PPI news on Tuesday. I think PPI news pushed prices lower. As price were being pushed lower, what I was watching what will happen around the major liquidity pools. And to mention on Monday, what also happened, we swept a major liquidity pool, which was the Friday low, the previous day's low, as well as the NFP low. So off then after we swept, we had that push higher, which also added confidence to me that we swept a major liquidity pool, which will also now act as a reversal point of a context area. Remember, whenever I want to enter a trade myself, what I'm usually watching for is a sweep of liquidities. I'm waiting to see displacement with fair value gap. I'm also watching to see a change in state of delivery to the direction I'm expecting to see prices push to. So in this area, we are in the context area. So number one, or my number one context, my confluence is we have seen a sweep of a major liquidity pool, which is the NFP and the Friday low. We had some displacements that were not tapped into, but on Tuesday they were tapped into. So we have confluence number two is bullish fair value gap being traded into, and now what I was waiting for is displacement of fair value gap going higher, or also what I call a sharp turn, whereby we have fair value gaps into a context area and also fair value gaps out of that context area. So in this scenario, we formed a sharp turn over here where we had this a small bearish fair value gap formed into this weekly immediate rebalance. Then we had this other bullish fair value gap formed out of that context area after also sweeping a major liquidity pool. So remember, Asia has consolidated, London has consolidated during New York, and most specifically during the PPI news, which to me was a manipulative news. I didn't trade the news. I came in later after the news have printed. What I noticed is we had a sweep of that liquidities, then a price displaced higher with this bullish candle, confirmed a fair value gap. And as the fair value gap was confirmed, I confirmed also, or price confirmed to me, we had formed a bullish change in set of delivery, whereby we had candle closing above the bodies of these are two consecutive down close candles, which had led to the sweep of the major liquidity pool of London lows. So after seeing all this was a key point to maybe taking a position. And what was I to target? The first target that I wanted to see is to see the previous week's high being taken, then price tapped into that weekly fair value gap, not weekly, 1 hour fair value gap, and what you can see is a price pushed higher of that 1 hour fair value gap after a change in state of delivery had confirmed. And also we somehow we had so many confluences. To me, I had a sweep of liquidity over key context area. Now we have a sharp turn that also is paired with a change in state of delivery. With all that, I took a buy position at this level. Then the market pushed higher, dropped lower back into that context area. They changed in set of delivery. Then the market started displacing or pushing higher, forming fair value gaps. Then later on, what you can see is prices came into close proximity to that previous week's high. Then we dropped off sharply, and we had imbalances that were yet to be filled. And also we had this 1 hour fair value area, of which what you can see is the market dropped at stung into that fair value area, and then prices started displacing higher after filling these fair value gaps, and we finally tapped into our first target. Remember, for that week I wanted to see the market displace up to the previous month's high, which actually didn't happen. And on Thursday, what we can see, price pushed above the swing point. We consolidated a little bit. Then the market, we had fair value gaps over here that the market on Thursday dropped down, filled that fair value gap. We had a breakaway gap around this area, and also reacted off that fair value area, started pushing higher. And I guess during the new London session, around during the early phase of the New York session on Thursday, we had a sting into that 1 hour fair value gap, as well as the 1 hour fair value area after the previous week's high had been traded into. And you can see we had a nice push higher, and we came into close proximity to what happened over here, and then the market dropped lower. So I'm thinking this is an engineer of new liquidities, and also to fake that those who are in for buying opportunities. Remember, for me, I didn't take any trade on Friday because my context area wasn't really tapped into earlier. So I had this 4 hour context area, and the market just came into close proximity, then pushed higher, which to me didn't convince me to go in for buys. Then later on we saw prices displacing, and around this area I will try to see what will happen of that if next week we can be pushing higher. So on Thursday, what this on Wednesday, Thursday, yeah, price came into close proximity to this previous month's high, and now we are faking traders to go to assume that the price is kind of shorting, but in real sense we are in a buy model. We are engineering liquidities. A good example is what happened on Wednesday. Price came in close proximity to the weekly high. Price dropped to fill the imbalances, and to maybe those who are expecting lower prices to enter in for shorts with their stop losses above that level, then prices displaced and took all those buy side liquidities. And same to this scenario, I'm expecting these liquidities being engineered. You can see we have relative equal highs around this area, which to me are so nice to target. So as of next week, what I'm expecting is maybe a drop to form the lower week over the next weekly candle, then a displacement into these liquidities that have been engineered, as well as these previous month's high. So we can see price delivered nicely, and I think I got two three trades three trades for gold last week, which were profitable. But on Friday, gold didn't tap into. I wanted to see a reaction of this level, which took me to EU. And EU, I got punished there, and I did my review. Go to my TikTok channel, Ranks Trades, and you can review or you can watch my analysis. Also, the analysis has been posted over here. Rewatch it, and maybe hopefully you can get to draw some lessons of that. So that is it for last week, and you can see a clear buy model. We had a nice sell model early on Monday, Friday to Monday, which I'm also expecting maybe a drop into the equilibrium point of from the high, from this high that was created on Thursday to the low. We might see price pushing to discount, of which we can push higher, but I will do a whole video to talk about that. So was a good nice buy model, and I think this is the level. If I could have caught a swing trade, a good swing trade around this level, and held maybe to given area, but upon noticing that we have not we kind of dropping lower, then taken something around this area. But that is it for last week, and let's see what for us. Hopefully you have learned. If you have any question, please feel free to query me, hit at me, and I'll get back at you. Also remember to like the live or to like this video, and I'll catch up later with you guys. Until then, peace out.